Welcome to ZICA Academy YouTube channel. In this lecture, I will examine IPSAS 11, International Public Sector Accounting Standards, number 11, Accounting for Construction Contracts. If you are coming across my lecture for the first time, please like the video, share it with others, and subscribe so that you don't miss my upcoming videos. To my returning subscribers, I say thank you for being part of this channel. Construction contract is any binding arrangement specifically negotiated for the construction of an asset that are closely interrelated in terms of their design, technology, and their ultimate purpose or use. Construction contract is any binding arrangement specifically negotiated for construction of an asset that are closely interrelated in terms of their design, technology, and their ultimate purpose or use. Examples of construction contracts include construction of refineries, construction of airports, construction of dams, construction of railway tracks, construction of roads, construction of bridges, construction of pipelines, etc. The objective of IPSAS 11 is to prescribe the accounting treatment of costs and revenue associated with construction contracts. The objective of IPSAS 11 is to prescribe the accounting treatment of costs and revenue associated with construction contract. Contract cost. Contract cost comprises number one, direct cost. Cost directly incurred in the contract. Number two, you have attributable cost. Costs that are attributable to the contract. Number three, costs chargeable to the contract under the term of the contract. Cost chargeable to the contract under the term of the contract. All these are contract costs. I want you to know that the following costs I'm about to examine are excluded from contract. Costs excluded from contracts in accordance with IPSAS 11. Costs that cannot be attributed to or allocated to contract activities are excluded. Those costs that cannot be attributed to or allocated to contract activities, all those costs will be excluded. Example include general administrative costs. These costs are excluded. General administrative cost for which reimbursement is not specified in the contract. Number 2, we have selling cost. Selling cost. Research and development cost for which reimbursement is not specified in the contract. Research and development cost for which reimbursement is not specified in the contract. Number 4, depreciation of idle plant and equipment. By idle plant and equipment, we mean the plant and equipment that is not used in a particular contract. Those plant and equipment that are not used in a particular contract, they remain idle to that contract. So depreciation of such plant and equipment will be excluded from the contract cost calculation. Yes. For solving questions on IPSAS number 11, construction contracts. Step 1, calculate the expected profit or loss from the contract. Step 1, calculate the expected profits or loss from the contracts. So to do that, we have estimated profit, estimated profits or loss or losses. So you start with the contract price. From the contract price, we less cost to date. Then we have the estimated cost to completion. Estimated cost to completion, that is cost to complete the contract. So the sum of these two will give you the estimated total cost. Estimated total contract cost. So by the time you deduct the estimated contract cost from the contract price, you arrive at the estimated profit. Estimated profits or losses. It will be profit if the contract price is greater than the total contract cost. Number 2, calculate the stage of completion. Step 2, calculate or determine the stage of completion. Calculate the stage of completion in percentage. And this can be done in two ways. Number one, we have input method. Input method. To estimate the stage of completion based on the input method, we have stage of completion, which is cost incurred to date over estimated total cost. Total cost to complete the contract times 100 over 1. That is based on the input method. The second method is output method. Output method. So stage of completion based on output method. We have value of work certified. Value of work certified over total contract price times 100 over 1. That is the stage of completion. Step 3. Determine revenue and cost to be recognized in the statement of profit or loss. Determine the revenue and cost to be included in the statements of profits or loss. We have statement of profit or loss extract. So you start with revenue. So to estimate the revenue, you may use contract price times stage of completion percentage. Completion percentage, or you use the value of work certified if the output method is used to estimate the stage of completion. So if you don't use contract price times stage of completion percentage, then you may choose to use the value of work certified. Then cost of sales. Cost of sales will be the total contract cost. Total contract cost times stage of completion percentage. If you deduct the cost from revenue, you arrive at the profit taking. Profit taking, that is the amount of profit that will be recognized in the statement of profit or loss for the period. I want to note if the outcome of the contract cannot be estimated reliably, revenue and cost to be recognized to the extent of the recoverable cost. If the outcome of the contract cannot be estimated reliably, revenue and cost to be recognized to the extent of the recoverable cost. Please take note of that. Step number 4. Calculate the amount due to or amount due from the contractee. Calculate the amount due to or due from customers. Or amount due to or due from the contractee. So we have to estimate this. We have cost incurred to date. Cost to date. Then you add profit taken to profit or loss. That is, the profit you have arrived at here, you add it. Now less the amount billed. Less the amount billed. If you deduct this, so where the amount is positive, where the result is positive, that means you have due from. If it is negative, you have due to. So that is amount due to. If it is negative, or due from customers. Finally, you also determine the amount of trade receivables, which will equally appear as current assets. Trade receivables. Trade receivables, you have the amount billed. Amount billed. That is your program, the progress payments received and receivables. That is the amount billed. None less amount received. Amount received. If you deduct that, you get the amount that will appear as trade receivables, current assets in the statement of financial position. These are the steps you need to follow when solving questions on IPSAS number 11, accounting for construction contract. Example, Housing for All Corporation is an entity established by Kazua State to engage in building construction. The corporation is partly financed with subvention from the state and also from the proceeds from its operations. It applied for a bid to construct 20 classroom buildings in the riverine area of the state. After all the initial procurement processes on bid opening were carried out, the corporation won the contract in June 2018. The contract price was 220 million naira. The building construction contract was billed for completion in 2 years. The company uses stages of completion on the basis of value of work completed. The following financial data were available in respect of the contract as at December 31st, 2019. All amount in 1,000 naira. Total contract price, 220,000. Total expected cost, 180,000. This is 220 million, 180 million. Cost incurred to date, 120 million. Value of work certified as complete, 140 million. Amount billed to client, Kazua State, 130 million. Progress payment received from client, Kazua State, 100 million. The contract was duly completed in June 2020, required. In line with IPSAS 11 construction contracts, A, determine the expected profit of the contract, stage of completion in percentage, as well as the amount to be recognized in housing for all corporations. B. Calculate the amount to be recognized as gross amount due to or from the client. Casual state. The amount of trade receivables and prepare extras of financial statements in respect of the construction contracts at December 31st, 2019. C. Identify what constitutes the composition of contract cost as contained in IFRS 11. This question is obtained from ICAN November 2023, question number 1. Solution. Back to the requirements of the question. The first requirement A, you are to determine the expected profit of the contract stage of completion in percentage. Now, let's start with the expected profit. Determination of the expected profit. The name of the entity is housing for all corporation. So the requirement A, now determination of the expected profit from the contract. Determination of the expected profit from the contract. Now, to determine the expected profit, we start with the total contract price. And you are given the total contract price of 220 million. Total contract price 220 million. From this, we are going to deduct the cost to date and estimated cost to completion. Now, you are given total expected cost. This total expected cost comprises the cost to date and cost to completion. The cost to date is given to be 120,000. That means the cost to completion will be 60,000. That is 120 million is the cost to date. Cost to completion will be 60 million because this 120 million is already part of 180 million, which is given to be total expected cost. So we can just take the 180 million as the total contract cost. So total contract cost or total expected cost, and that is 180 million. If you deduct 180 million from 220 million, then you'll be left with 40 million. This 40 million represent, you have to determine the expected profit. That is the expected profit from the contract. That is the first requirement. So we've determined the expected profit. And you also have to determine the stage of completion in percentage. Now, that is the next requirement. Stage of completion. Stage of completion. What will be the formula? So, now, if you look at the question, the contract price was 220 million. The building construction contract was built for completion in 2 years. The company uses stage of completion on the basis of value of work completed. The basis to use have been stated in the question. So you cannot make use of cost to date over estimated total cost. You have been told to use the basis of value of work completed. So the formula to use for stage of completion now will be value of work certified or value of work completed over contract price. Price times 100. That is the formula. Now, how much is the value of work certified? Back to the question. Then you were told value of work certified as complete, 140 million. Value of work certified is given to be 140 million over contract price. How much is the total contract price? You were told total contract price, that is 220 million. That means we have 120 million over 220 million times 100 over 1. So 140 million divided by 220 million times 100, that gives us 63.64%. So we have 63.64%. That is the stage of completion of this contract. Back to the requirement in the question. In requirement A, you have to determine the expected profit, which shall be determined. The contract stage of completion in percentage, that have been determined, as well as the amount to be recognized in housing for all corporation income statement at 34 December 2019. Now, the amount to be recognized in income statement, housing for all, housing for all corporation, housing for all corporation. Let me just say statement or income statement extract, or you can put statement of profit or loss. Income statement, then extract. That is the amount to be recognized in the statement of profit or loss for the year ended December 31st, 2019. December 31st, 2019. Amounting 1,000. The first thing will be revenue. Revenue. Since the basis for estimating the stage of completion is value of work certified, the revenue to be recognized for the current year will be the value of work certified. So, our revenue will be value of work certified. Now, back to the question, how much is the value of work certified, which is 140 million. If this value of work certified is not given, then the revenue will be 63.64% of the total contract price. But since the value of work certified is given, so we use that 140 million. Now, how much will be the cost that will be recognized in the current period? Based on stage of completion, the cost is 63. Stage of completion is 63.64%. So we have 63.64% of the total contract cost. And how much is the total expected cost? You are given the sum of 180 million naira. So you have of 180 million. 180 million naira. Then what is 63.64% of 180 million? That gives us 140,552. 114,552. If you deduct the 140,552 from 140 million, then you have 25,448. 25,448. This is the amount of profit taking. Profit taking. That is the amount of profit that will be recognized in the statement of profit or loss. Suppose you were given this as part of the question in IPSAS 1, and you want to recognize revenue from construction contract This will be 140 million will be added to other revenue, and this will be added to cost of sales. So take note of that. Now back to the requirement of the question. So housing for all corporation income statement at December 31st, 2019. We've done with the part A. The requirement B, calculate the amount to be recognized as gross amount due to or from the client casual state the amount of trade receivables and prepare extracts of construction contract, that the construction contract 31st December 2019. Now, we want to calculate the amount due to, or amount due from. That is the next thing we want to calculate based on the requirement B. Housing for all. Housing for all. Housing for all corporation. We want to calculate the amount. Calculation. This is requirement B. Calculation of amount due to or from the contractee, which is casual state. Casual state. So amount due to or due from casual state. So to estimate this, we have the cost to date. Cost to date, and how much is our cost to date? Back to the question you were told, cost incurred to date, which is 120 million naira. Cost incurred to date is 120 million. Then we now add profits taken. Profit taken, the amount of profit recognized for the period. Now, our calculated profit for the period is 25 million for 48,000. So 25 million for 48,000. If you add it to 120 million, then you have 145 million for 48,000. Then we now let's progress payment received or receivable or amount billed to client. And you were given amount billed to client, casual state, you were given 130 million. Now, if you deduct that, amount billed to client, casual state, which is 130 million. If you subtract 130 million, then you'll be left with 15 million for 48,000 naira. This is the amount due. Amount due to the contractor. So 15 million for 48,000. Now, back to the requirements of the question. You have to calculate the amount to be recognized as gross amount due to or from client. Casual state. This is the amount due to casual state. So, amount due to client. Now, so that have been calculated. The amount of trade receivables. Now, let's calculate the trade receivable calculation of trade receivables. So, back to the question. We have the amount billed to client. The amount billed to client is 130 million. Amount billed to client That is, amount due to Kazua State, 130 million. Now, let's the progress payment received. Now we have progress payment received from client, 100,000. Progress payment received, 100,000. If you deduct it from 130,000, then you'll be left with 30,000. This 30,000 is the trade receivables. Now, let's have housing for all. Housing for all corporation. Corporation statement of financial position extract as at December 31st, 2019. So we have current assets. Current assets. Our current assets include, you have amount due to Kazua State, 15,448. Amount due to Kazua State, 15,448,000. Then we also have trade receivables of 30 million. Trade receivables of 30 million. So, these are the items that will be recognized. Back to the question. The amount of trade receivables and prepare extract of financial statements in respect of the construction contract 31 December 2019. So that is all about the solution to the B part of the question.